Okay, guys, just starting on the weekly forecast. We'll start from the monthly time frame going down to the lower time frames. As we can see, the market has continued bearish very aggressively over the previous quarter. We're currently sitting in an area where we have got demand being tested on the lower time frame. So there were levels of weekly demand, daily demand, 4-hour demand that we have obviously mitigated as the market continues to push down. The fact that the market is now aggressively attacking this area does make sense, because as we can see previously in the summer of 2020, there was a very large monthly rejection in this area, which was then retested and then not mitigated. So the reason that this market is actually attacking the zone aggressively is because the zone has now been weakened, and it's effectively looking to either mitigate deeper or take out the zone completely, turn it into a swap zone. So effectively what may well happen is we may see something like this occur, where the market pushes back down again, or the market may actually use this zone to then catapult itself to target liquidity that it left behind previously, to only then sell further. What we will see is, as the week opens next week, we want to see how levels on the lower time frame actually then get tested. So we do have areas of liquidity below us. We tapped into a 4-hour demand. The market rejected out of that this week. We want to see it's turned into an indecision candle, and for that reason we want to see if the market now goes back and tests areas that we basically had marked up the previous week, which were supposed to be tested, and then aggressively attack this area, but the market continued on a trend. Onto the daily, we can see there were areas of liquidity left behind. Equal highs were left behind here. The liquidity pool that we had left behind on a monthly time frame, which is where you had a large sell up here and then the stop out here, the imbalance that was left in the middle of that zone has also not been tested fully. We can see here the market's retraced up slightly, but it hasn't taken the 50% of even this zone. Therefore, there's a whole heap of liquidity sitting up here, which people are trying to get in on, either to capitalize on the buy up into this area or selling out from this area day after day after day. So there's a whole heap of liquidity sitting up here, which we'd also want to see the market come and attack and test. But the fact that it's rejected from this area multiple times over the previous week, this is also a very strong zone that we want to actually watch. So this entire zone here is something we want to watch and see how the market reacts to this. It could be that the sell orders are so strong up here institutionally that the market gets held up at this point, and the sellers don't actually allow the market to go above this, otherwise it'll mitigate their position and they could just sell straight out of this zone. So again, even though you can't see something on the charts in real time on the lower time frame, bear in mind you do always need to consider that the higher time frame is king, and the inefficient wicks that you see on the higher time frame can also be a very, very strong key level that you want to watch to see how the market reacts to at least the 50% or very close to the 50% to then show you a change in direction. However, I personally do think that there may be substance for the market to actually attack lower before it kind of then reverses up. We have taken 50% of the monthly wick that was left from way back. So 50% of this wick that we mentioned before was actually not mitigated fully, and the market has this month over the past couple of weeks come and mitigated that level. So it's been taken, it's driven deep into it. This is actually where the market gets taken, but it's rejected out of that zone. So we may see a very strong reversal out of this zone up to the areas of liquidity for buys. So I'm quite strong on buys at the moment. We may see a bit of a drive down again into these zones. There are some levels sitting down here from 2020, which may not mean anything to the market, because as Asia opens, if it comes up and starts taking this zone, it may continue to push up. So for us initially in the week, this will be the level that we're looking at targeting for sells. If it doesn't sell, we may get a slight rejection and then buying out of this area, because this liquidity sitting here may be so insignificant that the market will actually buy up and then sell down into it and take it on the way down. It could be a sacrificial loss. So they could net off their positions by actually leaving this behind, making their money on the buy, and then selling down through it and actually picking them up on the way down. On the lower time frame, the story is pretty much the same. We've got a whole bunch of areas which have been taken throughout the tail end of the week, Thursday, Friday. So we had equal highs, equal highs. We were looking for reaction out of that. Very late on Friday, the market has come and actually liquidated 2 areas of equal highs that were left behind. On the 4-hour, on the 1 hour, it does get a little bit noisy, but if you know what to look for, you can see that there's two significant levels here and here. And it's actually tested a fair value gap now. So this inefficient gap that was left behind has now been tested pretty much to 70%. This could be a sign that the market wants to now sell down, which is what we want to see happen in Asia. If it comes down and sells into these zones, we want to see whether this area gets respected or the market continues to sell down into liquidity that's lying down here. Now, the reason that these lines are here is because this is way back in 2020, and I didn't want to draw the line all the way back, but these are the precise levels that we're looking to target for then buying out of the demand that we're sitting in. Again, if you're sitting very close to higher time frame demand, which is what these levels are, 4-hour demand here, 4-hour demand below, you don't really want to sell into demand. It's better to just be patient, wait for the setup to actually transpire, show you that it wants to actually buy out of this zone, and then buy out of it. Yes, you may miss a very good sell opportunity from here, or even this inefficient wick on the supply that's sitting here. So fine, you could miss out on 100 pips, but you're going to probably make 300 pips on the way up. So it depends upon how you want to trade. If you're confident in trading counter trend, then fine. But I mean, there's a very high chance you'll get liquidated. So for me personally, that is the projection for the week. We're looking for indication that this market has broken now interim structure. So we've taken a change of character on the lower time frame. Effectively, it's only an hour, but it is significant. However, we have also got liquidation of lows down here, and it wasn't a strong mitigation. This is very, very minor liquidation of equal lows, and it hasn't actually closed with the candle below that level. So again, this is a very sketchy area for me personally. I want to see the market either break up higher to show us that it wants to take these levels up here before it then comes back and tests and respects this level. I'm very confident this level will probably get taken as it comes back down here, and then it will respect levels further down that we've marked up here, which are higher time frame levels of demand. So again, things will be projected on the Instagram throughout the week. Look at the areas, look at the levels, look at the zones that I've marked up, and understand why it's there. So again, there's a whole heap of liquidity lying up here. As we said, people have been selling throughout the week. All week there's been sell orders sitting up here, and these guys are now going to get targeted with the move, which is why this area is so significant up here, because it could be a very good level to then sell down from. Okay, speak to you guys during the week. Take care.